Welcome back to the Homes Podcast, episode 39. Right next to me, I have my favorite host.
Hey, Dave Keller, co-host, brother.
Co-host, yeah, co-host.
Wow, you wore the same thing on the last podcast.
I know.
Do we have a new
Same
format?
No,
we must have a
we
new
don't.
format. Two
We just
shorter
came
ones
on
on the same day.
And today we have a revolving guest. She's been here before.
Yeah.
Yes.
Alison from KeyBank. How's it going?
It's going good.
We love the tan.
Yeah. Thank you. Me too. Let's see how long it lasts.
So David wants to bring you on today just to discuss appraisals, the shortfalls with them, but also I want to see how is it going in the lending side? How is it going on the mortgage side? Where do you see interest rates at the moment?
I don't know. The rates, they're very, who knows?
Ooh, okay. So they're kind of doing this?
So, yeah, I mean, you've been watching TV. They have a problem with, lowering the rates. And so every day is a different day, right, when it comes to any type of kind of rates. So I don't know. I can't predict really, just like you can't really predict where the market's going to be. Gotcha. I can't really predict where the interest rates are going to be.
But on the 3rd of February in 2026, what do you see in FHAs around like low sixes, high fives, or is there? It's kind of unpredictable.
I've been on vacation for a week, so I haven't really looked at the rates.
That's fine.
Maybe next time I'm here we can talk about that. But
I want to counter that and say if the right house and it's the right time in your life, a quarter point shouldn't matter that much, right? If this is my dream house, but I will not buy my dream house because it's 6.25 instead of 6. And worst case scenario is then you go 5K over, we do 5K concessions, we buy the point, right? We can get around a quarter point. At the right time is the right time. Jerry brought up something which really upsets me. Praise the shortfalls, guys. if I am one of 25 bids on a house and it's 50,000 over ask, but all bids are within 5K, can't I just show you the market just showed us? The market just demonstrated the house is worth 350 and not 300. Right, so that kills me. But the thing that has been hitting me a lot, and I know it's not the bank's fault, Allison. You're the face of the bank today. If something comes in short. So have you noticed, not from your bank, because I know you don't pick your appraisers. Appraisers go through, I believe, like a double-blind choice thing. I think is the right call. Mm-hmm. Have you noticed a increase in appraisal shortfalls either on net to seller, or is it mainly the shortfall living in the concessions that Dave Kellogg likes to attach to everybody?
Seller. I'm saying 2026 will start this year.
Okay.
I'm seeing to where the appraisers are falling under.
Yep.
Based on sellers' concessions.
Okay.
So, but every market, every area is different.
Yep.
I've seen to where the houses are coming in perfect or over.
Me too.
Yeah,
I think it's just a David thing.
I just, like I said, sometimes they come over 20, 30,000, 10,000. It's just really where the market is, the area they're buying, and based what the average sales is in that area, So, and of course, it's based on the appraisals, that they come in and based on their opinion of what the value is. You can put on a contract any price and agreeable and have a contract, but that doesn't mean that the appraisal is going to come in and meet that.
That's right.
That
Unless
price.
you're buying in cash.
Unless you're doing a cash deal, right?
The bank gets a final say.
Yeah. So it's right now. It's the beginning of 2026. I'm hoping because I've had not just one, not just two. I've had a few to where the seller's concession either we can't use. So, of course, then, we got to have the change of contract. Okay, so we got to do an addendum or whatever. Or it's not coming in as much. Or it's under appraising. So it's every market. It's where you go. It's and like I said, the agents, they write up the contracts. They, get the contracts in, signed, and the only thing we can hope is that it works out.
Correct.
And like I've had several with no issues. I've had some that came over $20,000, $30,000. I've had some that came in $10,000 less.
Gotcha.
So it's really hard. It's, to really figure out what's going on in 2026 when it comes to the appraisals, the market.
I think we got spoiled during COVID, 21 to 24.
Absolutely.
Because you could write anything. You'd be like, hey, look, that houseboat that's docked in someone's backyard, 100K over ask, guaranteed win, no problem. But it's funny because I think the idea of the bank appraisal is to kind of calm down crazy rushes on the bank, crazy, ridiculous things. And I feel like prices are a lot more stable than they have been. I think it's much more balanced now than it had been. The one thing I do wish we'd seen more of is higher appraisals for really high quality builds, because I feel like there was a lot of mediocrity that got high numbers during the I want to call it now past tense, a housing rush, if you would, where if someone took the time for hardwood floors and granite countertops, you would have seen like a premium ad, like, hey, premium quality will go another 10K up on that.
I see what you're saying.
But okay.
Now, when you're touching, I wanted to give context because you both touched on seller's concessions, and sometimes some people may not even know what seller's concessions is. So when it comes to seller's concessions, why we're seeing the shortfalls is because when the buyer is making an offer, they're increasing their offer to add in or roll in a portion of the closing costs into their loan. Is that correct?
Yeah, so normally when I do a pre-qualification, I always discuss what their funds are. And it's very important to educate them step by step. What they need to buy a home. Depends what county that they're in. You try to do the pre-approval as best as you can. And then I ask them, do you have assets? Are you going to take, so And then when I do send the pre-approval over to a realtor, I'll say, hey, listen, this is an FHA loan. It needs a 6% seller's concession. Then I explain to the buyer that, hey, what's going to happen, and I use an example, is if you're buying a $100,000 house and you need $6,000, which is 6% max for FHA, then you're going to be buying a house for $106,000, where the seller is still going to net $100,000, and you're financing your closing costs. It's the most easiest way to explain them mathematically. And I always tell them to grab a piece of paper and a pen and write down. Your realtor will lead your way, and they'll also go over this with you. It's just something I do up front to educate them if they need a seller's concession.
So when it comes to the appraisal shortfalls, are you seeing concessions being like an absurd amount where it kind of can't justify the comparables or the sales that are happening in that area, so that's why an appraisal is coming lower?
I can't tell you what the appraisal's thinking when it comes to the value, because
Gotcha.
I don't keep up with that market. I mean, I'm not, like I said, it's his opinion, what he feels that the appraisal is. It all depends what the seller's concession is. Yeah. Like, sometimes they'll say, hey, we get the contract, and you don't need 6% seller's concessions. And they already have a signed contract, let's say, and I was like, we don't need it. So I'll go to the realtor and say, listen, can we get an addendum lowering this a little bit? So some realtors will say to me, wait for the appraisal
Why
to
come. Why are you looking at me, Alison?
Hey, why don't you wait for the appraisal to come in, and then we'll go back and negotiate after that, which is fine. That's their job. But I try to do it to where it works for the buyer. And I try to educate the realtor that, hey, listen, they only have this. If it doesn't come in here, you know what I mean? We got to renegotiate. We need an addendum, whatever and you'd be surprised. Some do come in full seller's concession. So, and sometimes we can't use a full seller's concession. So, it's too much.
Yeah, exactly.
So I'm going to jump in with unpopular opinion. Dave Kellogg always wants seller concessions. Let's say rate's 6%, right?
Yeah.
Tomorrow your furnace dies. Finance that. I dare you. Or you get your engine blows. And now you're looking at, you need financing, so you're going to go buy an expensive car because you can't afford a cheap car. So now you're adding a huge ton of debt. Or, heaven forbid, someone gets sick, and if the option was seller concessions or no seller concessions, where else are you going to borrow money on a 30-year term at 5 or 6%? And my argument is money's better in your pocket for upcoming incidental as opposed to no money. You're completely house broke. You're making payments, but there's no oopsie daisy left anywhere. I'd rather pay 5% on 10K, which is what, $500 a year.
Yeah.
You know, if you don't need it, throw it into principal tomorrow. You just gained yourself a year of less payments or something, especially in the beginning.
Mm-hmm.
But
Or if you don't need the full seller's concession, use it to buy down your rate.
buy down rates, man. All of a
That's
sudden,
that is 90% of the
how
that we
many times did you
recommend.
do this last year?
I've done a lot of them.
A lot of it. It's great.
And
It's
and hey, I'd rather save then the first save. Maybe we'll save $50. But if you take that $50 and times that, it's a
30
savings
years.
for them. It's
30
50.
years.
And also, people got to realize, if you have that extra money, use it. Okay, because for you to go back and negotiate the contract for $3,000, it's not going to drop your payment down.
Yep.
But that $3,000 will buy down your rate, and it will give you overall savings long term.
Or it's a new toilet, or it's an appliance package, right?
Exactly.
It's but the thing is, it's your choice.
Correct.
Let it sit in the bank. I don't care. It's your choice, right? So generally, unless it's super competitive and we're at max, I just put an offer out. Got beat. I'll give you a quick story on that. Full offer. They had $250,000 to play with. They were like, Dave, can we offer $235? I said, yeah, but I'm not gonna, but why write it? I'm like, we're in a $250 to $275 house. He's like, I think it's gonna go $275. It went $276. And but so we went $250. We had $1,400 more than we thought we were gonna need. So we put that on top. So it was max amount plus $1,400. We didn't get it. I wouldn't do seller concession on that because it's too competitive.
Yeah,
it's too competitive.
Yeah, it wouldn't.
But if we're buying something and we have $10,000 of room on the mortgage, why not consider it? Especially if your number one goal is to pay off other debt. I would rather take 10 on a 6% interest rate and pay off a $10,000 balance on a credit card at 20%.
Correct.
Right. So plus that's a great huge bonus to your revolving credit. Now shows 10,000 less. The difference on a mortgage doesn't hurt. So now you get 20 points higher on your credit score.
Correct.
So
You're essentially saying, if you can, do the seller's concessions, keep the money in your pocket, and pay off other debts that you may have to incur.
The thing is, I like choice. I like having the choice of another 5 or 10K. You can buy down rate, or you can buy an appliance package, or you can put 5K towards a honeymoon coming up, or something, right? Or just put it back towards the principal.
Yeah.
That's totally okay.
Yeah.
Or just maybe furniture.
But now you get a
That's
choice.
Something a lot of people
You need that in your house.
So,
Yeah,
so
absolutely.
even if you don't need it, I'm offering you a choice for that money. And
Correct,
if you don't need it and you don't get it, okay. Guess what? We tried. It's okay.
Yeah.
It's okay.
Take it right off.
Yeah. So, in my mind, you should. Why not try? Unless you're in a hyper competitive marketplace,
Correct.
right?
Well, I didn't
And
know.
like I said, it depends what area you're in.
Yeah.
Correct.
It all depends. It really, really. I mean, if you compare let's say, school district, if you're looking to go Shen, which is Clifton Park, Saratoga, you're not going to see much seller's concessions, and you're not going to see much declining in appraisals. But if you go to somewhere like the city of Schenectady or the city of Albany, you may see, you know what I mean, where the appraisals are a little bit less, or you're just it all depends. It's not you're working on two. Like Clifton Park does not compare to city of Schenectady.
Correct.
So the comparable market's not the same. So you're not going to see a lot of seller's concessions on somewhere in Saratoga County compared to the city of Schenectady or Schenectady County.
Now we have a couple other things I want to ask you, and I know you have a thing or two you want to bring up. I want to ask you, how much money do you plan to give away this year of KeyBank's money using those lender paid credits? Because I think
The way you said that, I was like,
well, I think you did $100,000 last year,
somebody-
right?
Yeah. I
But
try
isn't
to.
that cool though? Because
So-
we just went with people who don't need seller concessions.
Yeah.
What if we're now talking about someone with full seller concessions that needs every single penny? And there are some really cool programs.
So, and I'll just talk about this briefly. Yeah, KeyBank has it's a $5,000 neighborhood credit. Okay, to anybody. You don't have to be a first-time home buyer. You could have bought a house in the past, you know what I mean, and buy a new one. But it's on the geographical area. Okay, so if that house qualifies, and Dave will call me up and say, "Hey, does this house qualify?" Yeah, they do. So it's $5,000, and it's not a grant; it's a gift that we give you at closing. It goes towards your prepays or your closing costs. You can't use it towards your down payment. Yeah. But it's a good program, and right now I got 3 of them. So I try to do as much as I can.
It's not bad coming back from vacation or giving away
Yeah,
5
yeah.
times 3. Yeah. Heck yeah.
So I always try to help. I always tell my buyers, say, listen, apply for this, see what you qualify. It doesn't hurt to go and apply for a grant for the city that you're getting a loan for. The worst thing they can say is no.
Exactly.
You're already prepared. Yeah, you're already prepared. You got your money. You know what you need for your closing and all that. So you're shopping around. You're prepared. But why not apply for the grants or whatever free funding they can give you for being a first-time home buyer? Apply. The worst thing they can say is no. You don't qualify.
Exactly.
It's a simple email, a simple application. I always tell everybody to do that. So, Key Bank has this program. We're a community lender, and we're here to help, the community, and we're here to help to get people into these first-time home buyers into these homes.
And 5,000 is 5,000.
Yeah.
It's money.
It's money.
But for a lot of people, that's the number between house and not house.
Yeah.
I've written things where I know if I don't get 6%, we don't get it. And other times I've gotten so much over what we can use. It's like, what do you do with the extra $1,200, right?
Yeah. Right. And like that $1,200, I'll say, hey, we can't use all this money. So we had one a couple months ago, me and Dave. We had like $1,800 where they couldn't use. So I called told the seller, I told the buyer, and I was like, listen, we're just going to buy down your rate.
Yep. We did, they brought, including their EMD, reverse money deposit, they were, including the EMD, I think they were $7,200 out of pocket to buy a 2-family on a double lot with a driveway.
That's a steal.
$7,200. So when we talk about $5K difference, we are literally talking about keys or no keys in some days.
Yeah, exactly.
And it is, by the way, February. A lot of people are getting
a tax refund.
Tax refunds. You know what's a great? Yeah, it'd be a great way to do that. Buy a 2-family, or a 3 or a 4. Hey, if that's your whole down payment, man, that's a pretty good way to take a little something from tomorrow and make it something for the family forever.
And I just think it's what's going to be, and I do this anyway. It's very important because of the economy's changing, the rates are changing. These sellers' concessions may be a factor. The values of the houses coming in, the work that needs to be done on these houses. Maybe people do an inspection waiver. And then
that scares me.
So do an inspection waiver, and then the appraisal comes back, and there's a lot of stuff that needs to be done.
Yeah.
And then you got to try to go back to the seller. They waive it. So I always recommend someone to have an inspection done.
Correct.
Okay. But I just think that education is it should be the most important thing for a buyer, and actually to a seller too, when you list a house.
Yeah, absolutely.
And say, hey, this may be an issue, fix it, or some people say sell it as is. Well, it has to meet all health and safety requirements,
exactly. It can't be molded in the basement.
Yeah.
Well, so, we find it all the time, don't we?
Yeah. So, and I try to educate the customer.
Correct.
And I'm not a realtor.
Yeah.
But I say these are things you may see. Your realtors is gonna, lead the way. And I tell them based on what I experience.
Correct. Speaking of first-time home buyers, you have something coming up, some educational piece that you want to talk about, right?
Yeah, so usually 3 times a year, and it depends where it is. I'll do one like in the city of Schenectady. I'll do one in Amsterdam because I'm in that. I'll do which is called a first-time home buyer program, or just really an educational seminar. You don't even have to be a first-time home buyer. You could have owned a house and or even looking to sell your house, and you haven't bought a new house in 30 years.
Nothing changes.
And and then come to these seminars, and I always have like a realtor there. I try to get an attorney there, home inspector there, and have them explain. And I try to tell them to go on and do a first-time home buyer web seminar because that's very educational. It's free, so they can go on there. So if they have time, Yeah, so I try to do that 3 times a year because you do have people that want to buy a house. They don't know how to save money. They don't know that these grants are out there for them.
Yeah.
Maybe they just don't have good credit, and they just don't know how to work around that.
Yeah.
We hit credit a lot, so not that it's sponsored. Feel free to sponsor me.
Yeah.
World. You should monitor your credit, and I use one.
Credit Karma.
Credit Karma. If there's other ones out there, I'm sure there are. Feel free to sponsor us. We'll talk about you.
Just
a lot.
Google it.
Yeah.
But the point of the story.
Fixmycredit.com.
But the point of the story is that's something that you should pay attention to. And I feel like the more serious you're getting on bigger purchases or a new job, because jobs check too.
Yeah.
Monitoring your credit is important. I mean,
Landlords check too.
Yeah. Yeah. Well,
I mean, I had 12
I've got a
people.
good one off camera for you.
I had 12 people last year that bought a house that I worked with for the last couple years. Worked with their credit, helping, step by step, calling them up. And I talked to probably 20 to 30 people a year that looking to buy a house, but either, they don't have the credit. You get that 30% that really wants to buy a house that's going to work on their credit, and you work with them. And I feel great when I go to their closing and I've been talking to them for 2 years
Yeah.
and get their credit and able to shake their hand and say congratulations for being a home buyer. So we've had clients like that.
I'm thinking of one specifically.
Yeah, and it's like either you want to help that buyer become a homeowner, or you just want them to come in and say, hey, come see me when your credit's in good standing.
So it's really cool when someone takes the hard work on, the bull by the horns and gets it done. Because it's not like, hey, I worked hard for this. It's like, you, Mr. and Mrs. Buyer, you worked hard for this.
Absolutely.
I showed you 3-4 houses, but you took a 605 credit score to 705 in a year. That's hard
Exactly.
work.
That's
right?
discipline. That's
And
accountability.
the one specifically loved Lafroig, which is a real smoky Scotch. He's like hell yeah. So his closing gift, I was like, do you want to make out with a campfire, or you want to sit down and lean back and enjoy something? He's like, campfire. I'm like, yeah, all right. Lafroig could be a sponsor, by the way. Hey, Monday I'm gonna come in here with a coffee cup from someone local.
Yeah.
And yeah, I don't know, but I'll mention it a lot.
Yeah.
But so how would I find out when and where these educational pieces are, Alison?
I will email you.
You'll email me. So
Because I got to figure out date and time.
So your contact information and email address will be posted on the YouTube portion of it. So if someone wants to get a hold of you, say, Alison, what you're talking about speaks to me. I'm working on my credit score. I want to be a home buyer, and they want to go to the class.
Yep.
They would find your email in the YouTube video and email you direct.
Yes. They'll email me directly. And the purpose of this is, like last year, I think it was February, we had a first-time home buyer in Amsterdam at the Amsterdam housing. Okay, we had 45 people that showed up.
That's an incredible amount.
It's a lot of people.
We were not,
Yeah.
we're not expecting that many people. And then we had the second one that we had, and I think it was late March or, let's say May. I can't remember. I did 2 of them last year, but then we had 27 people come. But and then put it out of them 45 people. I ended up doing 12, 13 people out of that program.
That's a 30%.
And then I still
great.
have,
That's
and I
amazing.
still have people right now I'm working with that
Still
went
in
to
the
that
funnel.
class, and trying to get them with their credits, save some money, and trying to show them how to budget. So it all depends. When you do the classes, you want to have at least 20 people in the class to make it educational for everybody.
Yeah.
Gotcha.
That's cool. And for our listeners, I will do my very best to show up in case somebody wants to meet this sultry voice in person. No, but I mean, I think Jerry and I have shown that we're here for the education and success. So, go if another agent's there putting their time and they have a good track record of helping those who need a little bit more effort and guidance. That's a much better deal than just picking up the phone book and grabbing somebody.
Absolutely. I agree.
Pick someone who's willing to put the effort in for others. Because if they're willing to put the effort in for others, they're likely going to be willing to put the effort in for you.
Exactly.
Right. I've always heard give hard work to a busy person because they'll work it in. It's hard to give work to someone sleeping on the couch.
Yeah.
because they'll sleep it off.
Yeah, here we are putting the work
And you got to
in.
have a lot of patience with these buyers because they don't
Correct.
know. It's just, but then you get to know them after working with them for a long, you know what I mean, for a long time.
So you get to know them and you fall in love with people, right? Like people are the best part. I like houses, but people are the best part. I have said over and over, and kiddo in the back here will probably tell you, I don't like doing renovation loans because they are notoriously hard for me to close. Either the client doesn't know how much work they're gonna have to put in, multiple bid contract options and stuff. And I tell people I don't want to get to know you to not watch you succeed. So if I'm putting my time in, your success is my success. I don't want to get to know someone and watch them fail and then say, well, now I don't know what to do with Thanksgiving. The turkey I bought last week because there's no Thanksgiving dining room table, right? So, we're in it for the long haul.
Yeah.
And you want to keep them, and the most important thing is the referrals you're going to get out of them.
Yeah, exactly.
Hey, Alison helped me for, we went 2 years, and then they have their cousin and their friend, and then you refer them to the real, So, and I feel good at the end of the day when they go to closing that I was able to help someone.
No, it must be an amazing feeling.
So,
Yeah.
I mean, I think teamwork, education, you got to have a team.
You do.
And most important, everybody's got to be able to be on the same level and be able to communicate in the same level.
Correct. Yeah.
All right. Well, I've got everything I was hoping for. I got to yell at Alison once about something that's not in her control, about shortfalls. You talked about one of my favorite things, Jerry. Thank you
Yes, you're welcome.
for the pitch on
You're
that,
welcome.
which is seller concessions. And I really want to make the effort. And Jerry, please come with me, or
Yes,
remind me,
let's do it.
or
Let's do
remind
it.
me,
Let's do it
Jerry, because
together.
I'm
Come
terrible. I think you're. You make it to the gym every day, I can tell. So I know you're good at scheduling. So make sure you bring me with you.
Let's do
Okay,
it.
let's go with Alison on the next one. So the best way again just is reaching out to you via email.
Yes, so you
Cool.
can reach me at Allison_Anderson@keybank.com, or feel free to call me at 518-376-3816.
And we'll go from education on day one to home ownership at the end of the run.
Absolutely.
Love it.
Drop the mic.
Boom. Thank you, everybody.
Right, I had to look at that camera, right? When I said that.
Great. I love it. I hope this is still there because this is great.
You're good.
Because what? We're people. I love it.
Well, was I supposed to do that?
Yeah,
Look at the
I
camera?
loved it. I loved it. I hope
You're
I hope
good.
someone's driving and hearing this. This feels like the episode's corrections or something. This is right wrong.
Or was I supposed to stare at you guys?
No,
No.
you done it.
You're
great. Thank you, everybody.
Okay.
That was episode 39 in the books.
The Homes Podcast is a co-production between the City of Schenectady and Open Stage Media. For more information about OSM, visit openstagemedia.org.